Holistiplan presents Tax Time with Jeff Levine. Let's talk taxes. Hi, I'm Roger Pine from Holistiplan, and I'm here with Jeff Levine. He is the Chief Planning Officer at Buckingham Strategic Wealth, also a member of our team at Holistiplan as our tax planning strategist. Jeff, welcome to January 31st. Tax season is now in full force, isn't it?
Hey, we are here. We are rocking and ready to go. Let's do it.
Yeah, no, we've already, Holistiplan now accepts 2021 returns, and we've had a few dozen uploaded already. Those are probably self-filers just based on the profile of my old
And
clients.
those with a refund, right?
Yeah, I mean, I don't know. I had retiree clients who and they would get on the case of our custodians when that 1099 wasn't in like the exact moment. So,
and they don't even have to go out. Like most 1099s, well, for W-2s, like 1099 for independent contractor stuff, that's just first deadline of today as we record this. So
right. So those are the Uber nerds, but now we're into kind of the main part of tax season. And what I wanted to talk about today was what's it like from the perspective of the tax preparer? And then what I'd like to get to from there is how can we as advisors make sure we don't end up on the naughty list of these tax preparers who are working with our clients, make sure we're as helpful as we can be and avoid problems down the way. And I'll just say at the outset, I might say CPA instead of tax preparer every time. And I just know that that's the shorthand. I mean, enrolled agents and CPAs, but yes, tax preparers we're talking about today, what they're going through right now.
Well, right now they are just getting ready. This is a calm before the storm, right? And maybe I wouldn't even say it's the calm before the storm. Like it's starting to drizzle. It's just getting there where, it's coming. You're battening down the hatches and it's just about to go into, effectively hibernation for a lot of CPAs for the better part of, 2.5 months. February, beginning of February is still kind of trickling in. It depends honestly about the mix of the business that the CPA has, because we always, just talk about April 15th is coming, but a lot of CPAs have a ton of partnership returns or S corporation returns, and those returns have to be in by March 15th. So there is, in some cases, a much earlier tax season than what we think about, right? For the big push. And the makeup of the CPA can be very impactful there. So one of the things you can do as an advisor, I know we're going to get into that later, but just to simply knowing what type of practice the CPA has, right? What is their business? Ask them. Literally say like, when is your busy season? A great example of this is one of my best CPA friends. He works with a particular group that gets paid in very different amounts throughout the year. And so they do annualized quarterly payments, right? They use the annualized method, or rather, effectively like doing 4 tax returns throughout the year to figure out how much they should be paying in estimated taxes. And so he's actually busy at 4 times throughout the year that are very different than other CPAs would. So these are the types of things you just want to know, like when is your busy season? But certainly for most, tax season is a bear of a time. You're working 6-7 days a week, maybe late nights, etc., weekends away from the kids and whatnot. So one of the things I always tell advisors is you want to help a CPA or a tax professional during tax season, just get them home for dinner one extra night with their family. Like that's a big deal for give them an extra Saturday watching a soccer game with their kids or something like that. Those are the types of things that are really invaluable.
Yeah. Send them some of those little 5-hour energy drinks,
Yeah.
in case they start getting tired, hit them with that. And so how does a CPA, again, they already said it again, but how's a tax preparer, how do they build a file about a client? I know for me, with my personal taxes, I just kind of have like a shared drive and I just shove stuff in it during the year and I try to give that to the CPA. But I find every year I'm adding stuff last minute. Like how are they organizing all this influx? And by the way, way more, me as an advisor, I maybe had 100 clients maximum at a given time.
Mhm.
Presumably CPA is dealing with a lot more. How are they building that file, organizing it all so that it's all at their fingertips when they need it?
It's amazing how much things vary from office to office. So you've got offices still that just say like, bring me your papers, right? And that's kind of it. Just bring me your papers. We'll sit down. I'll take it. I'll talk with you about what happened throughout the year, and boom, we're done. Then you've got a lot of CPAs, kind of the standard practice, if you will. When I say standard practice, maybe it's not standard, but best practice would be for sending out some sort of organizer, right? A tax organizer throughout, and then just ask, what jobs did you have? What 1099 should we expect? What things did you do throughout the year that we may need to report? Did you do this? Did you not do that? Dependency change. The problem with those organizers, right, is that they're still taxpayer reliant, right? You're asking your client to fill out this stuff, and
it's like I'm filling out a whole tax return myself. I could use TurboTax for that.
Mm-hmm. Yeah. So there are some people who just absolutely abhor them. And I know some CPAs and tax preparers who say like, look, if you don't fill out my organizer, you don't work with me. We're not a good fit, which is fair. It's fine. But I also think it's worth noting that even if they do, it's still the individual who is not tax savvy filling out that organizer. So this is one of those situations where the old like trust but verify really is important, and where once again an advisor can add value by either helping to corroborate or simply taking off some of that lift, right? Like if there are brokerage accounts, things like that, why are we making the client do this? Why aren't we letting the CPAs know? And again, I know we'll get deeper into this in just a bit, but those are the types of things that really advisors can add a tremendous amount of value. The advisor knows what contributions were made that may not be reported somewhere on a 10 or maybe reported, but after the person files their tax return, right? Like IRAs and Roth IRA contributions. It's like, great, you got a 5498, but it comes in May.
Right.
So how good is that if you file your tax return in March or April? And then, of course, you've got CPAs who are more technologically savvy and sound, and they will do like digital organizers. There more and more is being done to try and automate that process to pull in information directly from payroll companies and things like that, right? It's not quite there yet as an industry, but they are making strides. And so really, we really span the spectrum of like, bring in your shoebox with your receipts to here's my digital organizer, start uploading things and categorizing them in my digital file storage system for us. So all over the place. Got
it. And presumably the tax preparation software they use also gives you, here's what they did last year. And they can watch for, okay, wait a minute, I got 2 W-2s last year and I only got 1. Like, what's the deal with that? Or, same with accounts.
Generally there's like pre-filled in, so you don't have to put in the address or like the tax ID number of the business, things like that. Also, most professional software will give you kind of at the end a summary, right? Of, hey, last year's total W-2 income was 150,000. This year it's 90. Right. And so even if you have the same number of W-2s, maybe someone keyed in a digit wrong or something like that, right? Looking at those things, always checking last year versus this year is really a vital part of a good tax return review process.
Yeah, and the concern there is probably that it could lull the tax preparer into a false sense of security, because they're like, oh yeah, well, I'm just going to assume it's the same as last year. Meanwhile, we, the advisor, are mucking things up by, we're flipping out, standard deductions for itemized because we're doubling up. Right. We're doing Roth conversions. We're doing QCDs. And so we're creating complexity that wasn't there before, potentially before this client started working with us, and probably is not there for this tax preparer's other clients who probably aren't doing different stuff every year. So this is something that I highlight as like, we advisors, as much as we love creating complexity because we're creating, we hope, value, that very complexity makes us a pain in the butt when it comes to capturing all that properly on the tax return. And of course, if it isn't captured on the tax return, it never happened.
That's right.
Right. If you pay tax on the QCD didn't happen as much as you did all the right paperwork and all that stuff back in August of last year or whatever. So, yeah, we advisors are partly to blame for certain complexity trickling into these tax return preparation processes. So, how do we not get on the naughty list of these tax preparers, either during this season or after the fact, after the return has been filed?
Well, I would start by saying staying off the naughty list is probably just answering emails and phone calls when they happen, making sure that information is provided to clients, not doing things that are boneheaded tax mistakes, right? Like, did you accidentally take a second or third 60-day rollover, and try to do that during the year? Now the CPA has to be the one to be like, listen, I got to tell you, your advisor just cost you. Like, not doing those things keeps you off the naughty list. I think
Right.
then there's kind of like this advisor purgatory that you can go to, which most people are in, which is you're not in the naughty list, but you really haven't made your way to the nice list either, right? Like, you're just kind of the advisor. Like, oh, okay, like just a regular advisor, right? There's the ones that the CPA says, or at least in the back of your mind is thinking, you got to get away, you got to run, right? And even if they don't come out and overtly say it, they're going to allude to in the meeting, like, oh, okay, well, I don't necessarily see this with my other clients, or like they're dropping those little hints, like, I know this is someone you may have worked with for a long time. I'm not trying to step on toes, but right. And then there's the whole group where it's just like, all right, I got what I need. This is the basic situation. And then there are those who make it to the nice list, right? Which is really where we want to be, because the nice list means they'll take your call when you want to go out to lunch with them, right? And talk about what your business is. They will, they will help with a situation. If you've got a planning situation you're working on with the client, right? They're going to take your call when you want that information back too. And to get onto the nice list, I think it's really a matter of not just getting them the information they need, but helping them organize it, put it into, just a nice seamless package, and make it easy. Again, if you want to, like, you joked around about 5-hour energy drinks, but it's amazing to me how many CPAs I know, they end up with like a whole desk full of coffee mugs and little candies, and like, hey, know you're going to be busy, so here's coffee for the season. It's like, I don't want coffee, I want time. Time. Like, everybody sends those things, right? So you get them, the big payroll companies, and when they always market to the CPAs, obviously, because they're a big referral source. You're getting 3 or 4 things from ADP and Paychecks, like sending out that I'm not saying you shouldn't do it. If it's part of your deal and your shtick and your marketing, that's fine. But don't think that's like the CPA is getting that, sticking it on the desk and going, oh my God, this is amazing.
Yeah, this coffee mug changes everything. Yeah.
This is it. Wow. Like, that doesn't get you to the nice list, right?
So
getting into the
time is the thing. So yeah, it's a good point. So like, if a CPA tax preparer reaches out to you with a question, that is your highest priority call for the next 2 months. Is that a safe way to approach it? I mean,
obviously speaking, yeah. And then
could be something else, but I mean, that's your highest priority call.
Yeah. I mean, can we be proactive too? Like,
yes. Okay. That was good. Yeah. That was next. Like, how do we put it on their desk so they don't have to ask us for that clarification, and the client doesn't get caught in the middle also, trying to explain, I thought I did a thing with charity out of the IRA. I don't remember what it was. Like, give the CPA a list. Obviously, I mean, I work for Holistic Plan. We built something called a tax letter, which allows advisors to quickly build a list of what they did last year. It seems like it's only fair that if we're going to be the ones helping advisors make things more complicated, we also allow advisors to be proactive about make it easier. We have a tax letter to let you say, boom, 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 I did these things. It gives you a letter, which you can then provide to the CPA. Presumably you want to get that to them mid-March at the latest. Eventually they start cutting things off. I know you want it by next week, but like, what's the latest that you could try to be proactive on that sort of thing?
So I'll be honest, like my thought is if you can get, like, we're already at January 31st, we should as planners know most of this stuff already.
It already happened, with the
Right.
exception of maybe your what contributions to your SEPs and your IRAs.
Which, if it hasn't happened yet, you have
Do
nothing to
them.
tell the CPA,
Yeah. Well, I
right?
mean, April 15th, right? And you could,
Well, you might do, right, but I guess at this point, right, it's like I'm going to do this, or I will
yeah,
do
yeah.
this, or I wait for my CPA.
The
Like,
plan
well,
is set in stone at this
yeah.
point. Yeah.
So I'm a big fan of, by this point, already having it on their desk. And obviously we're at January 31st. Everybody hasn't already, it's not like somebody can listen to this and instantaneously crank out all of them, although it doesn't necessarily take a ton of time. But like, this is the best month to me, January or early February, if you haven't done it already, because you want to get it to them before everything. They can start organizing and saying, okay, this person's going to need 3 1099s. We know those are coming in. Unless we get 3, it's not like setting that up beforehand. Now, certainly you want to get to the CPA either before or concurrent with the client, right? Because once the client gets in there and they bring the stuff, then the CPA starts going through the file. And all of a sudden it's like, well, I need this and I need this, or I don't know about this. And now, even if you provide that letter afterwards, they've already kind of started to go through that process, right? So you want to beat the client, so to speak, or at least meet the client with that information to the tax preparer. And so knowing, your client can be valuable too. Some people, they've got K1s, they're basically getting extended every year. And so the CPA kind of is not really, like, they know they're on their list of people who need to be filed, but they're not even thinking about them right now because they know they're not going to do it until June or July or August or sometime like that. And then they've got others who, like you said, some people have already filed. Well, they might have others who come in early February each year. You want to make sure that information is over to the CPA as quickly as possible. And sometimes it might be a 2-step process, right? You might say, here are the 6 accounts that we're expecting 1099s for, like his IRA, her IRA, his 401k, her 401k. They've got a joint taxable brokerage account. She has an individual tax. So all of these are the 6 accounts. And then you send that, let's say, in early January or mid-January, and then maybe by mid-February, you actually have those, the corrected ones, because we know they're going to come 18 times, right?
Yeah.
And then you send those in a separate email saying, or a separate letter saying, hey, per the letter we sent in January, here are the 6 1099s you should, I mean, that's the type of proactive stuff that you just, again, is just invaluable to a tax preparer in the middle of tax season, when you're trying to manage 100 things. Time is of the essence, and
Sure.
it's just easy to become disorganized.
One thing I struggled with, we did tax letters in my old firm for years. We're talking over a decade we were doing them. That's why it's something that I quickly wanted to make sure we built into Holistiplan. One of the things we stopped short of doing was providing the 1099s. And our reasoning was, we don't manage all the stuff this client has. They've got a bank account, they've got rando other thing that their son-in-law manages, whatever.
Mm-hmm.
And my concern was always, if we provide a stack of 1099s and 1099Rs, but it's not everything, the client might think, oh, it's all done. The CPA might think, oh, it's all done. I got it all from the advisor. And then there's these other accounts that are out there. That always kind of was a thing I struggled with. But I mean, I will say, based on the firms that we work with at Holistiplan, a good number of them are collating all those 1099s and sending them also. If you can do it and you can deal with that problem of what about the ones that aren't in the package you send, it seems like a really great value add. The client does not enjoy collecting 1099s. They don't like having a check, as much as we provide a checklist and a tax letter, it says these are your 6 1099s you're going to get. They don't like having that out on the kitchen table, waiting for them to come in or whatever. So it's a nice service. It's always something I struggled with. I'll tell you another little hint from my days as an advisor where we were doing these tax letters. We did work with one particular CPA, and we had, like, this is not an exaggeration, and like 50 clients in common. And this is a firm that had like 250 clients at the time. So it was a lot.
Yeah.
And
it's a lot.
And we were cranking out all these letters, and he was like, can we just like put these all in a spreadsheet? And basically, so for this, it was only for this one CPA, but going down, let's do it this way. Going down, each row was a different client. and going across the columns were, did they do a QCD? Did they do and we had, I don't think it was any less work for us, but I think the way this particular this tax preparer wanted it was in one. That kind of surprised me. That's why I asked about how do they organize the information, because to me, one big spreadsheet that covers 50 customers, I don't know how they would
Yeah.
make sure to go and look at it. You know what I mean? But that was an arrangement we had with that one CPA. So
It's an interesting thing. And look, at the end of the day, if that's the way the CPA wanted it and you're able to do it,
yeah,
saving them time, there's probably a reason why you guys shared 50 clients. I suspect that over time, a lot of those were referrals.
correct. In both directions. Yeah,
Mhm.
exactly. There was a long standing relationship. So we were definitely going to meet him halfway. So the last thing I'll say about tax letters, which we're talking about getting on naughty lists, we would get mistakes. So even though we would provide a tax letter to every single client's tax preparer, we saw mistakes on probably about 30% of all the returns that we got back, and for various reasons. And quite frequently, that puts the client in a uncomfortable place, because we're pointing a finger and in one direction say this is wrong, and the CPA says either it's not wrong or they never told me.
Right.
And I'll tell you, it was really nice in a lot of cases to have something to point at that says, well, actually on February 10th, here's the email I sent you. I think email's a way to do it because you get a timestamp on it. I sent you this tax letter that said that we did that thing, and you were notified of it and you missed it. And I cannot tell you how many times that saved us in a situation where the CPA was trying to, that didn't get us off the naughty list, because us telling them that they screwed up the return doesn't make friends, but it certainly helped us with the client relationship, because it gave us ammunition when the CPA came back and said, they never told us. We did.
Bottom line, there's a lot of reasons to do a tax letter each year.
Yeah,
for sure.
Yeah. So that's the thing that I'm proud of that we did. It's something that I can, what I'll do is, we have like a little demo. I'll put a little in the little YouTube thing below this. I'll put a link to that other video about how that tax letter works. But I'm a huge believer in it. I'm a huge believer in making CPAs' lives easier. And you're right, sending them a coffee mug and more caffeine probably isn't the way to do it. Although I think a 5-hour energy would be a funny joke, like, because no one's giving them a 5-hour energy. Am I right? So,
Yeah, probably more coffee, more coffee packages for sure.
Right. So yeah, if you want to stand out on that desk full of free coffee mugs, send that one 5-hour energy. They'll think you're a nut or something like that. Anything we missed, Jeff, about how to make sure we give that CPA? It's a great way to frame it. Like, if you can just give them an extra evening at home with their family, that's how you get on the nice list with these.
That's it. That's the value. Yeah. I mean, I just think of, all of my friends who, no, I can't do this, or I can't do that, or no, I haven't seen my kid in, like 4 weeks or something like that. There's no value there's nothing that's more valuable than being able to kind of change that narrative for them, even if it's just for a day. So yeah, just time, give them back time.
Yeah, great. I love that. Well, Jeff, unless you have anything else, I'm going to say that's it. Best of luck to your colleagues on the tax preparation side. We'll do everything we can.
Yeah, I'm glad I don't prepare nearly as many returns these days as I used to. I'm not going to lie. Like I like knowing where the forms are and keep my hands, keeping fresh, but I don't miss filing hundreds of returns.
Yeah. What's the future? Is it sustainable?
It's after the present. That's what
but is this gonna, are people gonna keep going into this profession and putting themselves, when I lived in England, you had 1.5 years to file your tax return. We give people 3.5 months to do it.
Yeah, and we continue to make this more and more complex. I think at some point it'd be fair to revisit, can we push out deadlines further? But the problem is, so much of like a CPA's angst today is clients waiting until April or something like that, coming into last minute and then expecting like the return is done overnight. So even if we push back things another month or two, there's still going to be that whole
Same
group
problem.
of clients that just wait another month or two longer to do their own thing. So it'd help a little bit, but I don't think it would help nearly, nearly as much as we'd hope.
Okay. Well, like I said, good luck. We'll do what we can to help you on the Listaplan side. Until then, Jeff, I'll see you soon. We'll talk about some other cool 2022 strategies for financial planners, financial advisors.
Always a pleasure, sir.